Welcome to Trading in the Trenches. I'm your host, Steve Mercy, and this is my trading journal. All right, for today's journal entry, we got SOXX. All right, this stock was brought to me by the homie Don. Don, if you're watching this, good looking out. You found a setup for my subscribers. All right, guys, so real quick, I'm going to break down this chart, give my thoughts on it. What do I see? What do I like? What's the trade plan? All right, so first things first, I look at the monthly chart. I want to make sure that the price has room to run, okay? This red line here on my charts is 3 ATR, average true range, and that's basically where I like to sell and take profits or consider moving up my stop loss. If you just look at the chart briefly, you can see that when the price kind of hugs up on that red line, eventually it pulls back, right? All right, so we got space on the monthly. The weekly, we have a little bit less room, all right? On the weekly, we only have room up to about 262. This doesn't mean price can't go right and blow past that area. It just means that when it gets to that area, I'm going to be looking to tighten up my stop loss. All right. So the setup that I found that I like is here on the 195 chart. It's about equivalent to the 4-hour chart. All right. I want to show you guys the setup. So price has been trending higher. It's beautiful. We got squeezes down here, which means the momentum is building. And now we just need a place to get long, a place to stop out, a place to take profits. All right. So the first thing I noticed when I looked at this chart was that price seems like it's having similar pullbacks in it. So I want to take this trend-based Fibonacci extension and start measuring some of these pullbacks to see if we can find symmetrical levels. All right, so the way this works, this is a 3-point tool, so you're gonna click on the swing high, you're gonna go down to a swing low, and then you're gonna go up to the highest high, or the all-time high. Okay, so you see how price kind of wicked right through that zone? That's a violation of this zone, so the zone is no good. All right, so I'm just gonna kind of go through these now that y'all understand the concept and see what I can find. All right, so I'm just measuring swing highs to swing lows to see where I can kind of build a zone, all right? So that one was decent enough. This one is like right on the zone, so I'll leave it for now. Let's see if we don't find something better. Alright, so we got these levels, fib extension, trend-based fib extension. Alright. There's some more down here, but I like what we got here. I'm just going to move on. So now I'm going to use the fib retracement tool. Okay. And I'm going to measure some of these levels. So we'll start with this one. Alright. Alright, so we got this 236 level. So let me cut off all these other parts just to make sure the chart looks nice and neat. All right. So that was from way down here. Let's move up. Keep going. We got 382. So if you see, I'm just measuring from previous swing lows up to the all-time high to basically build a zone, as you can see. And then as the zones come in, I'm just clearing up the charts. That's it. Very simple. Again, I'm just going in, cleaning up the charts, making sure that I can accurately see what I'm doing and understand what the chart is showing me. All right. So we got fib extension levels. We got Fibonacci retracement levels. I want to see if I can get a fib extension going the opposite way. Meaning if I was looking for a move downward. So I want to just switch this. Let me see if that, no. So that one was too short. So let's try again. Maybe this long. That one's a little bit more. Let me see if this one will hit. No, that's too low. All right, I'm gonna use this one. Sweet. All right. So we have a zone here kind of building. All right. Let's see, the bottom of the zone, 238 and 15 cents. And the top of the zone, I'm gonna use this 238.81. So 238.15, 238.81. And I'm gonna get rid of these as the price kind of just went through those levels. All right, so we got 238 and 15 to 238. What was it? 81. Yeah. Okay. This is our fib cluster. All right. So what that means is that this group of Fibonacci levels that you guys just see me put together is basically where the price respected. Okay. So that's awesome. What you can do with that is you can use this as a stop loss area. So if price falls back through this zone, then you could exit the trade. Because the low end of the zone is 238.15, I'm gonna just call the stop 238. All right. So my stop loss is gonna be 238, just underneath the zone, right? The Fibonacci cluster. And now for upside targets, I use the Fibonacci retracement tool again, but I'm gonna do it from the all-time high down to the swing low. All right. So we got a few targets. Let me just throw them on real quick. All right. So first upside target is going to be 252. Second, 256. Okay. So I'm going to put TP1, 252, and TP2, 256. All right. So let's just pretend that for tomorrow, we're getting in right where the stock closed at. All right, and we're stopping out under 238. So if you get that entry and you go for TP1, you're basically risking $1 to make 73 cents. And if you get that entry and you go for TP2, you're risking $1 to make $1.16. Essentially, it's a 1-to-1 risk-reward ratio. There's some more upside targets here. You know, if you decided to go to TP3, 243 risk-reward ratio, and TP4 is a 341. So it really just depends on your risk tolerance, how much time you get in the contract, and what you like in terms of trading style, trading plan. Okay, so these This is the setup. Let me show you guys the contracts that I like. It's going to be the August 15th series. And if you have the capital, obviously the at the money options are preferred. Even if you want to go slightly in the money, the 240 calls. If you have a little bit less capital or you prefer bigger percentage return, then I would go out as far as the 255 calls. So let's just call 255 calls at, what was it, $5? Yeah. At $5 or less. All right. I'm going to take this one step further. I want to show you guys what you could expect to earn or lose depending on this setup. All right. For hypothetical purposes only, we're going to stop out at 238 and we're going to take profits at 260. We'll just call it somewhere in the middle there. So I'm going to go to optionsprofitcalculator.com. I love this website. They give you option ideas if you want them, and you can also see what your returns will be like if price gets to where you want it. So August 15th, let's say 255 calls, $5. And let's say I want to go to 260 and I want to stop out at 238. I'm going to calculate the risk and then it shows it to me. All right. So you got plenty of time, right? On the top here is going to show you how much time you have to expiration. On the left here, it's the pricing. Okay. Essentially, you're going to lose 50% of your contract. Down here, a stop under 238. Obviously, the closer, or not, maybe not obviously, but the closer you get to expiration, the more the contract is affected by theta, and the more, or the less time that you have to basically get in the money or to have your contract reach into profits. So let's just say today's July 18th, by the way. So let's just say by July 28th, it got to 260. You would have a 88% return, all right, which would net you a $400 profit, all right. If the contract took longer, if it didn't happen until August 5th, then it would only net you a 50% return, $271 in profit, all right. And then this is your sliding range for a loss, if you will. So even if the position gets to 259.50 on the last day, that's going to give you a loss. All right. I always compare options contracts to playing hot potato. You don't want to be the last one holding the potato or you're out, and you don't want to be the last one holding the contract or you're out. So ideally, right, this stock has been in a range here for some time now, basically all of July. So ideally, this move is going to play out within the next 10 days or so, which would put you at about July 28th to see these kinds of returns. The quicker the move happens, the better the profit. All right, guys, this is the setup on SOXX Semiconductor ETF. I hope this helps. Happy trading.